Hello and welcome to my morning note. Last week we saw a quite dramatic sell-off for the dollar against virtually every other currency out there, following some surprising words from the chairman of the Fed, Ben Bernanke. That sell-off has to some extent already been reversed, but it does raise the question, how strong is the bull case for the dollar and how much is it being driven by the words of different central bankers? With me now to discuss this is the head of Global Foreign Exchange Research at HSBC, David Bloom. David, thank you very much for joining us once more. Let's start by taking a look at a chart from your latest outlook, which compares the way the dollar has responded during previous dollar tightening cycles.
Yes.
So it's interesting that there's quite a variety there. What has driven the way the dollar has behaved when in previous cycles?
Yeah, it's not plain sailing or clear cut when policy changes and the Fed tightens. Because if they're chasing inflation, it tends to be that the dollar actually falls. If you recall, 1994, they tightened rates quite dramatically, and actually the dollar went down because people thought they were behind the curve. But when the Fed is ahead of the curve and moving for economic reasons rather than inflationary reasons because of the strength of the economy, that tends to be very, very powerfully positive for the dollar.
And plainly this time they're, if anything, worried about deflation at this moment. They're certainly not doing this to head off inflation if they are indeed starting the tightening cycle.
Yes, so a nominal rate rise is a real rate rise. You don't have to worry about inflation, and the Fed's cycle has turned, and hence we turned very dollar bullish.
Really? What was the precise moment at which you made that turn? Was this at the turn of the year, or what was it that the Fed's done?
Actually, I'm traditionally a dollar bear.
Yes.
So I call myself a vegetarian that's now eating meat.
Right.
Or a leopard that's changed its spots.
Right.
On May the 22nd, Bernanke got up there. We were prepared for him to change the path of monetary policy, and as soon as we saw that, and you look at the historical precedents, we said the dollar is taking over, the dollar is king for the moment.
Okay, now let's move on to another chart that you produced. Obviously, the Fed is in many ways being led by the economic data for the next few months. This shows that indeed, whenever something comes up in the data to surprise people, that has a consequent move on the dollar. Is that something we can expect to carry on?
Yes, what's interesting is we're back to cyclicality. All those structural stories and the structural way we were looking at the economy for the moment has gone by the wayside. We're looking at the data, we're data dependent. Stronger than expected data is now good for the dollar, and especially if it's to do with the employment market and the unemployment rate falling. So this is how fast, how soon the Fed will taper, and then pause, and then raise interest rates. But the clear idea is that we're on a tightening path, and it's for those economic reasons, hence the dollar just powers ahead.
Now, what's the biggest risk to this bull scenario? Is it deflation, if we have more of a deflationary shock from China than is expected at the moment, or what?
No, I think the biggest shock is that the numbers turn out to be poor. The economy is not really doing well. The interest rate sensitive sectors of the economy start to do badly because bond yields have risen and the economy peters out.
So the blue line on there just gently moves downwards again.
Gently moves down. An aggressive move down, and the dollar benefits, because then, and the situation you're talking about in China means we go risk off because we're really worried. That takes you back to the dollar again. So the dollar benefits from very strong data and very weak data, but mildly poor data or just mildly strong data, wishy-washy world, that's not very good for the dollar at all.
Okay, one final parochial question. We've had a very lively year for cable, for the sterling against the dollar so far. Many people think that it could yet fall through a trapdoor. That's been a very popular call. Still hasn't quite happened despite a couple of attempts. What's your prediction? What will drive cable for the
Well, we think it's not from the UK side. We've seen quite good numbers. Then we saw a poor number. We've seen Carney come in and he's into play. But really it's the dollar that takes up the head of steam. And when the dollar powers ahead, we've got cable going to 145. So that's not really a trapdoor. That's down 5 flights of steps at the moment. And of course the euro weakens as well. So euro sterling's not really moving, and that's telling you this is a dollar story. Yes, cable will weaken, but it's because the dollar's powering ahead, not because we've got any particular problem in the United Kingdom.
Okay, David, thank you very much indeed.
Thank you.
One clear message to pull through from all of this is that it's the US economy, stupid. When it comes to asset allocation for almost any asset you care to mention, what really matters at the moment is the data coming out of the US economy.